Welcome to the Delaware Mortgage Rate Weekly Mortgage Market Update for the week of July 7th, 2014. Hello, I'm John Thomas with Primary Residential Mortgage, here to give you your update. Well, last week was not kind to Delaware mortgage rates. They did move higher, so hopefully you took our recommendation to lock on last week's update. If we dig into what happened last week, let's look at the charts. You can see those red candles down starting last week. The bonds sold off all week. Interest rates did move higher, and what caused that was we had some good economic news and the stock market rallying. So mortgage bonds have sold off. Now, on Friday, though, they did form a hammer pattern, as you can see right there. That's called a hammer pattern. That's a technical signal, signaling that the bond could have reached the bottom and it could move higher from here. So we're going to recommend cautiously floating your Delaware mortgage rate to start the week to see if these technicals hold. So we need a green candle on Monday. That'll confirm the hammer pattern, and then mortgage rates should improve throughout the week. If we don't get that, they can continue moving. Bond could continue to sell off, rates could move higher some more, so we quickly switch to a locking stance. So we will keep you updated. Make sure you stay in touch. Now, last week, what moved the market? The big report came out on Thursday. That was the jobs report for June 2014. It came out much better than expected. 288,000 jobs were created. That was part of what caused the sell-off in the bond market, was anticipation of a good jobs report. And then the unemployment rate was also in that report. It dropped down from 6.3% to 6.1%. So all in all, appeared to be a good jobs market report. But if you dig into the report, it was not as good as it seems on the surface. Over 800,000 of the jobs created were in the part-time or temporary labor force. So that was not good news. Remember, we need permanent, long-term jobs, sustained recovery, not part-time or temporary employment. And we can see this if we look at the labor force participation rate, the LFPR. That remained exactly the same at a 35-year low at 62.8%. Because that measures the number of people 16 years and older that are working full-time. So even though the unemployment rate dropped, it dropped because it counted people part-time, no longer in the number. So we need full-time employment for a serious recovery. Still good news, but not as good as it looks on the surface. And then weekly initial jobless claims came out on Thursday as well. They ticked up 2,000 claims to 315,000 claims for the week. They've been running for the last couple of weeks rate in the low 300,000, so that's been pretty steady. Now, we did have some great news in the housing market last week. CoreLogic reported the home price index for May 2014 showed home prices increased 1.4% from April to May of 2014. And then year over year from May 2013 to May 2014, we had 8.8% appreciation year over year. That's a good number. Now, it is down from nearly 10% in April, but it still shows a good appreciation in the housing market. And slowing of the housing market is what we've been predicting, but it's coming down to a pace that is sustainable. 6 to 8% growth year over year is sustainable. Double-digit growth is not. So this is actually good news for a sustainable long-term growth in the housing market. Then we also saw the release of pending home sales for May 2014. It surged higher 6.1%, which is well above expectation of 1.5%. So this index tracks the number of new contracts signed in the month of May, but not necessarily closed. This was the largest one-month gain since April 2010, which was when everybody was trying to sneak under contract before the end of April to take advantage of the first-time homebuyer tax credit that was expiring at the end of April 2010. So that is a surprising report, but that was definitely a good report for pending home sales. Now, if we look at the local news, the next free first-time homebuyer seminar is Saturday, July 19th. That is in Newark, Delaware at the Christiana Hilton Hotel from 10 a.m. to noon. You can register for that event by giving us a call in the office at 302-703-0727 or register online, www.delawarehomebuyerseminar.com. Look forward to seeing you guys next week.